Most important central bank meeting for US bond yields this week isn't happening in Washington. It's happening in Tokyo tonight at midnight. So here's something that most American investors forget. Japan is the single largest foreign holder of US Treasuries. For decades, Japanese capital has quietly helped fund the American government, buying our debt, supporting our markets, keeping our long end yields lower than they'd otherwise be. But that arrangement was built on one condition. Japanese yields had to stay low for years. The Bank of Japan held them there, buying its own bonds, pinning rates to near zero. Well, that era is ending. The yen sitting at about 160 to the dollar right now. The 10-year Japanese government bond yields around 2.65%, near its highest in a generation. And this week, the BOJ is expected to do something that it hasn't done in scale for about 30 years, raise rates. So the saying goes, follow the money. When Japanese bonds paid nothing, Japanese institutions sent capital abroad into US treasuries, US stocks, chasing yield they couldn't get at home. But if their own government now pays them 2.5%, 3% at home in their own currency with no exchange rate risk, why keep money in America? Because they don't have to. And the early signs are already here. In May, Japanese investors started pulling money out of foreign stocks at the fastest pace in 5 years. Now, you may ask, how does this affect me? The US Treasury isn't shrinking. It's borrowing, it's growing, and it has to keep selling long dated debt to fund the deficit and to pay the interest on that debt. If a major reliable foreign buyer steps back right as supply hits the market, you have more bonds chasing less demand, and the price of less demand for bonds is higher yields on everything tied to the long end: mortgages, corporate debt, the cost of carrying the national debt. It all goes up. Now, this isn't a switch that necessarily flips overnight. Japan's not going to necessarily dump $1 trillion in a week in a single meeting, and we're not going to break the treasury market tonight. But what is changing, shift in the source of demand for American debt. And there's even a little bit of a kink this time. The BOJ's own governor, who has been very vocal about fighting inflation and raising rates, is missing the meeting. It's kind of strange, but we won't go there. So while everyone else is watching what the Fed's going to do this week, watch two numbers out of Tokyo: the yen and the 10-year JGB. Because if Japanese yields continue to climb and capital keeps coming home, the pressure on America's long end doesn't come from Washington at all. It's going to come from the other side of the world, and that could put tremendous strain on our financial system. Let's watch.